The Local Show, sponsored by Victory in Motion, home of knee repair, not knee replacement, on NewsRadio 570 WSYR, on 106.9 FM, and live everywhere on the iHeartRadio app. The Local Show features in-depth conversation with business owners, employees, and influential business leaders throughout Central New York, exploring their successes, challenges, and reasons for doing business right here in our growing community. The Local Show is produced locally by Zoe Advertising. Now your hosts, Tom and Steve.
So we've been speaking with George Powers, owner of Powers Accounting, Payroll Made Simple. So you've been doing this for quite a while. It's been over 20 years, right?
It has.
Yeah, okay.
A little over 30 years.
30, okay, a little over 30.
I know I don't look it. But, yeah.
I wasn't thinking that.
After COVID, so there was the before time,
yes,
and then there was the COVID time.
It's kind of like BC.
Yeah,
no,
BC, right. So with this COVID thing, did taxes change in any way? Did that affect the way people did taxes?
Yeah, the taxes themselves didn't change, but it did change the way people deal with them. So what ended up happening was kind of interesting. Is during COVID, we used to have meetings with our clients and we'd get the information. Everything was canceled. All appointments were canceled, and we just got information. And since COVID, it's actually from our perspective, it's gotten harder getting information. One of the things is everybody's going electronic. So, for example, in New York State, if you collect unemployment insurance, they won't send you a form.
No, yeah,
you actually
not
have
like
to
the old
sign
days.
on
Yeah,
and get it. There's a lot of times you can opt into getting your W-2s electronically, and you don't even sometimes think about it. So we'll have people that worked a couple weeks for a job, don't get a W-2, don't think about it. So the harder thing now is actually getting information. That's when I started.
You think it would be easier?
There's so many choices.
Yeah.
Think
Well, you
about
get
all
an
the
email. The
passwords.
email. Did I get that? What was that? Was that spam? What is it?
Right.
I mean, it used to in January, February, you all those reports come. You get your W-2. If you had an investment, you get all that stuff.
In January, the investments in January. Now they're March.
Right.
But it used to come in through the front door in the mail with important tax documents. You pile them up by January 31st. You had them. You walked them through my front door. We had them all in a pile. Now they come. Sometimes they come in the front door. Sometimes they get emailed. Sometimes you got to go to a portal to get them. Sometimes you got to get it some other way.
Yeah,
so it's become much more challenging to get the information, which has been an interesting. And I talk to a lot of people around the country that do our kind of work, and the tax season for us has gotten heavier and heavier to the last few weeks of the season. We sometimes will get 50% of our stuff in the last 3 weeks, and you just can't do it.
Is that because people procrastinate, or you procrastinate, George?
Well, we don't get the information from the client.
So you can't do it.
Right.
Yeah. So it's become challenging in many ways, just because the information it should be easier to get, but it actually, you think about technology. Technology was supposed to make our life easier.
Right.
I don't think it has. It's made it much more complex because now, how many times do you not get a bill in the mail? Used to be a year ago. Now they're emailed. I can tell you how many times I miss an email.
Sometimes
I emailed this to you. I get 1,500 emails a week. You know what are the odds I'm going to miss one? About 100%.
Yeah, right. So as far as businesses are concerned, a lot of them got like loans or I don't even know what they call those
PPP
things.
loans,
PPPs, and
ERC credits,
and credits and things like that.
Yes.
Are those pretty much done with? Are you like the tax liabilities or whatever?
The PPP loans are done. They've been forgiven.
So they're forgiven.
The ERCs are done. There still are some of the EIDL loans that are out there.
What are they?
30-year EIDL loans.
IDA?
EIDL.
Okay.
ID. Now, what does it stand for? Economic Development. What I don't even remember. EIDL loans. I forget what they even were called at this point.
Right.
They're SBA loans. 30-year SBA loans that were given out during COVID, and there's still a lot of those out there. Most of them are still out there.
People got to pay those back, though.
Over 30 years.
Okay.
Yeah.
I see.
So it's small payments. So those are still out there.
Any credits or any monies that were given, did people have to pay taxes? Did businesses have to pay taxes on that?
Some of those, yes. Some of those, no.
Yeah,
it depended on the credit. And what was interesting during that time is they were changing the rules on a daily basis. Okay, this is taxable. Oh, no, it's not taxable. It was taxable to the state, but not the federal. Okay, now it's not taxable to the state. Okay, wait a minute. Now they just changed the rules again. It was more than a bit confusing because
it was just as confusing as COVID.
Oh, it was a daily basis. They kept changing the rules on us.
So what about right now? What should someone do, or is it too late for last year? They just kind of write it off and go, I bring my brown bag to George and here's my receipts. Figure it out, fella.
The changes that you can make are not all done. A lot of them are over at the end of the year, but there still are challenges and things. Give me some opportunities you can still do. Obviously, IRAs, retirements being one. It also depends on whether you're a business or a W-2 employee with somebody. Businesses have more opportunities to make some adjustments and some changes. Make sure your books are done, make sure they're clean, make sure you have opportunities to ask questions. So there still are some things. Again, retirement is one of those things. There's a couple other items that are there available. But most of it you should do before the end of the year.
Do you ever hear people go, well, I bought a luxury car so I can write it off? Okay.
Yeah.
Does that make you roll your eyes?
By the way, I do hear that, yes.
Okay, so when you hear that, do you roll your eyes or do you go, well, let's look at that? Or how do you...
Let's look at it, because you can't write off something. Everybody has, well, my neighbor or my friend said I could do this. Well, maybe. A vehicle is one of those things that is very deductible, but also very abused as far as deductions. If you want to deduct a vehicle in your business, you need to use it for business. You can't run back and forth to the grocery store and say, well, I want to put my wife's car in the business and we want to deduct
But it's always a mix. For most people, isn't it a mix?
It's a mix, and so you would take a percentage. So if you drove your car, say 60% for business, 40% personal, you would deduct 60% of the cost of the vehicle, or you could do a mileage deduction. There's choices and things you can do with that. But if your spouse never works in the business, you really can't write off their car because it's not business related. You're allowed to write off business related expenses. You 100% are, but not non-business related.
What about clothing? Is that business related?
The shirt that you have on is business related because you have your company name on it. So the purchase of that would be deductible. The laundering of that would be deductible. The shirt I have on, just a regular, no, I don't wear these shirts anyplace but to work, but my business name is not on it. So that's not a business expense.
Is that because you're trying to hide your business name? No.
No, I just need to buy new shirts.
Tom does it.
I launder all my Zoe shirts.
There you go.
On a weekly basis.
Yes.
I mean, I must have $1,000 in laundry, and I'm not writing that off.
Well, you can write that off.
So you can write
the unfortunate part is
but
you're
I'm
an
an
employee, so you don't get that deduction.
Oh, I don't get the
but you get it for the state. See, we're back to that.
Oh my gosh.
Different rules.
So you can because it's considered a uniform. Is that kind of where
It's a business expense because the business's name is on it. Now you've changed the shirt from just anything to now it's advertising, it's a uniform, something of that nature.
Interesting.
But can you wear it other places? Yes, of course you can, but it does change the nature of the shirt. So again, it's back to the idea. Can you write off clothing? Well, usually not. But sometimes you can.
Well, if you got a business or don't have a business,
and you got these complicated questions,
this is your guy.
Answered.
And they've really messed with payroll this year. There's a lot of new complications with that too. So we've been making some updates.
So you got the payroll service, small business accounting for 300 or 400 companies. Gpowers.com, Tom. Gpowers.com is George Powers. Thanks for joining us.
Gee whiz.